So, producer, we look at this OGRAIN as sort of a workbench that you can play around with what-ifs, do planning on, change things around to see what effect those changings have. The changings are profitability. Profitability is income, that is revenue, price times yield. So there's two variables there that if you're uninitiated to organic production, you should really take the time to study very carefully how it has happened, how they have gone in the past, and what is the likelihood that they will go the same way in the future. The second thing is cost, and this involves all of the issues of the speed bumps that I talked about. From that, you have to predict cash flow if you're going to borrow money, or if you want to face your spouse and say that you can still go on vacations and buy things. And the other thing that you have to very carefully monitor is the purchase of assets. Next thing. So in this tool, we are asking the user of the tool to predict yield and price. And so if you are uninitiated to organic production, this means talking to people who are in organic production, neighbors, relatives, and so forth, to get a feel for what kind of yield suppression you might have versus what you've been doing. Then we also ask you to decide your expenses, and that is, how many times am I going to have to cultivate corn or beans, and how many times, what can I get out of a hay crop? And this has cost attached to it, and we're going to ask you to decide that in the tool. And then finally, decide what purchases of assets you're going to have to get into this production. So next one. So what do you use this stuff for? Well, the analysis of this information gives you the long-term financial impact of your management decisions. And so the tool is made so you can go back and change what your management decisions are to see what change that has on overall profitability and cash flow. Secondly, you can, I just mentioned the second one actually, and that is the what if for an alternative rotation or an alternative management strategy of some sort. And then finally, analyze what land and capital acquisition decisions make sense for your farm going forward. The tool allows you to look at all those things. The tool also is a communications device to communicate with ag lenders if you're going to have to borrow money to get into organic production. As I mentioned before, also other people who are interested in your success, like your spouse and other partners, and landowners if you're renting land. So there's contact information in your packet for these two handsome young men. He's younger much than I am, but so you can get a hold of us anytime. So we're going to look at the tool very quickly, and I say quickly because to do this in a way that you could then go out and use it is a stretch in this amount of time. It probably would take a couple hours to completely familiarize you with this tool. However, in the tool, we have a user manual that is quite extensive and can be printed out in normal sized paper that you can take and read at your leisure. Also, we reference something called a tutorial, I call it, called Turning Grain into Dough, which was written by one of the team members that worked on this tool named Paul Dietman, who works for Compeer. And this is a very fundamental tutorial that you could hand somebody that has had absolutely no experience with organic production. Okay? Yes.
Just a real quick, so people are perfectly clear, this is a spreadsheet tool that's freely available on CompassToolbox.com. Free to download, free to use, no cost.
Good point. And all of our Compass tools are similarly free. Okay.
And while this first page doesn't look like a spreadsheet because you don't see any grids, this is what you can do with Excel to try to make it look nice. So that's the user manual. Are you going to move on to the first page?
So the way that the sheet is constructed, the whole workbook is constructed, is that there's a user manual, a crop planning page, a yield and price page, a crop expense page, crop gross margin, and asset, both equipment and, John and I both use Apple computers, so this is rather awkward. Equipment page, a buildings and infrastructure page, and then finally a summation of all of your decisions into a financial page that gives profitability and cash flow. So back to the very first effort in using the tool is to plan what crops you're going to grow. All of the white blocks are entry blocks on this page, and once you list all the crops here, the rest of the workbook captures that selection of crops. We also at the top put in year so that we populate out to the 10-year planning period. We talk about a transition year and an organic year. These may be stair-stepped by crop on a big piece of land, or they may be for the whole piece of land working through this. So it'd be 3 years of transition typically, and then organic production. This totals up the acres. Then we go to the price, the yield and price page.
Do you want to just mention these this column here?
What we've built into the tool is that if you are taking straw off of a small grain or stalks off of corn, you indicate that here, and in the later sheets, it allows you to put in the cost and the income from that activity. Okay, yield and price. So the crops will automatically populate on this page for the crops that you picked on the first page. You put in what units of measure that you want to measure that crop in, often bushels per acre. But in hay, it could be tons per acre. And then you put in for yield what yield you anticipate during transition. And then during organic production, what is the bookends of the possibility of yield, from low to high, with something in the middle that we'll call base. Similarly, on price, whatever units you want to measure price in, we'll put in what the transition price is, what the lowest price you anticipate over the 10-year period, and believe me, this is out floating in Never Never Land. But if you're a little clever about looking at the trends, understanding what has driven price in the past, are those factors going to remain or change in your estimation after you've studied these things? This is what you put in for low, base, and high on those trends. Yes, ma'am. Yes.
Correct. So for a given year, you might have some acres of corn that are in transition and some acres of corn that are organic.
Yeah. So the header up there, acres in each crop. Go ahead. I'm sorry, say it again? Yeah. Doug has labored through the tool, found some mistakes, and we've tried to fix them. with real data. He's an 18-year veteran organic grain producer. Okay, so back to yield and price. Similarly then, and then over here, the stocks column is again this crop residue. What do you do with crop residue?
So we decided we were going to harvest stalks, so we need to include some information about yield and price. So you can click on that and go down to this table and put in the information for your stalks, and jump back up to this table. So if you're not harvesting straw or stalks, there's just none here. But these are little buttons that you can click to get to those additional tables.
Okay, next page, crop expenses. This is divided into pre-harvest, but pre-harvest as really sort of purchased inputs, and then land prep, planting, and weed cultivating, machinery operation, and labor costs. And what we recommend here and facilitate is if you don't have a good record of these sorts of costs for organic production, you must, to use the tool, imagine what actions you will have to take to make an organic crop. And if you're a conventional producer, best go talk to somebody who's been through this. Again, some of the universities, including Iowa State University, have some teasers in crop budgets that will inform you, gee, this is the kind of thing I'm going to have to look at. However, once you pick the functions, to understand what it will cost is probably way beyond anybody's pay grade. And so the facilitation here is a link to Iowa State Machinery Cost Calculator. I've looked at a bunch of them from the land-grant schools. This is probably the best one. And all we're after on this is the direct cost, not the owner cost, because we have another way to capture owner cost. And this link will take you to the web page if your Wi-Fi is good and you have fiber optics or whatever.
Looks like I accidentally clicked it. It's a very touchy
machine
pad here.
Yeah. Okay. So then we go to a page where okay, I'm sorry. Let's slide down. I forgot the harvest.
Right. So all of the crops that you put on the first page will be listed in this drop-down menu. They'll change from crop 2, crop 3, crop 4, depending whatever you put in on the first page.
And so one of the things that on the top is it should be intuitive, and that is the more soil fertility you put in, the higher yield you're going to get, presumably. And this is where you can play with, if I add more fertility, get more yield, that takes you out to the yield column. Now, eventually what we'd like to do is put sliders in all of these, not just individual values, but that's down the road. So then we've grown the crop, we've cultivated it, and now we are harvesting, and these are harvest operations that all of you should know well. Then on the residue, because we did say on this particular crop that there was residue and we would take it off, you put in the operations, and all of these operations are editable. We just put in some as a teaser to help you understand. And then finally, rent and taxes on the land. Each crop that you put in has a page just like this. And so if you go back up to the list of crops, and Doug will show you this, you select the crops that you put in on the very first page. This one happened to be corn, we put it in the first page. But all of the crops you put in on the first page will show up here, and you just click on which crop you want to put input cost to. Okay? And then there's a page where you get some free time. This is all calculated for you. This is a summary of the gross revenue and the expenses per acre and something that we call gross profit, which is revenue minus direct cost. So that you can now look at all the crops and say which are contributing the most profitability to the farm. There's another place later on you can also do that. That's this page. Then we go to an equipment page where we do three things. One is you list all the existing equipment you have, your best estimate of the current market value of that equipment, if you're going to sell it, the year that you plan to sell it, and about how much you would get for it. Now, Doug has pointed out a very important thing, and that is that some of this equipment you may be using someplace else, like on conventional crops or other organic land that you have. So what we've decided is that you would make an estimate of what percentage of that piece of equipment you use relative to this land and put that in for the value, both the value and the sales value, if you plan to dispose of that piece of equipment. Yes, ma'am.
So that we can track over. I got it.
We did put that in on this crop expense page, which is where you'd be going to that Iowa State calculator, or perhaps elsewhere, or maybe you looked up to find out how much some fertilizer cost. There is a place for notes in here on this page. We have not built in a lot of places for notes on other pages, but we certainly could. Correct. So for every time that if you look here on the left here, you can see that we're on rows 216 to whatever. If we go to a different crop, we're on a completely different set of. These are all hidden rows that you're just accessing when you're selecting a crop. So there'd be a section for notes for each crop. I don't know what I'm doing to this trackpad, but it's very touchy, much more touchy than my computer. Those are, you can click on those cells. I cannot remember if I have locked those cells. It looks like their cells are currently locked, but I could unlock them.
Yeah, add more notes, exactly.
Well,
okay.
Good suggestion.
Let's see, we're back on equipment.
Yep.
So you list all the equipment that's going to be used on the piece of land that you're really looking at. Market value so-and-so, percentage of that piece of equipment that'll be used here. For people transitioning from conventional, there's a lot of new equipment that will also be needed. And we have, so that's the existing equipment. And out here, you put when you would want, no, you don't put it. You put the year of sale up in column D, and it will populate out here.
Sell that for $500. So
yeah, so it pops that. So entry cells are just the white cells, and this does the work for you. If you put in a sale date, it'll pop it into that year. Then below, we have space for we sum all of that, of course. Then we have plans for acquisition of additional equipment, and this is particularly relevant to somebody transitioning from conventional to organic. And again, the type of equipment that you plan to purchase, the year that you will purchase it, and the expected price. And this then populates out into the brown area, and later, as you can imagine, will show up as a cash expense in that year. Down here, This is something that our friends from Compeer introduced to us. The concept is that if you have a stable of equipment to do this work, it needs maintenance. It's going to wear out. It's going to have to be sold. You'll have to repurchase some things. That maintenance factor, when Compeer looks at a farm loan, varies from 7% to 15%, depending on what they think of the stable of equipment. This is an entry cell, so you could say, I've got all really cool new equipment. It's going to be here a long time. I'm not going to have a lot of maintenance, and you could use a lower rate, a capital, as we've said here, a capital asset recovery rate. But 12% is, the assumption is, that's about a 8 to 10 year lifespan, which is not unreasonable if you're using equipment heavily. So you put that in, and this sheet then calculates what capital asset recovery total will apply to both the equipment that you have on hand and the equipment you're going to buy. The second, or the next page, building and infrastructure is constructed exactly the same way. The anticipation would be that buildings that you need for this particular operation would be relatively small if it's a grain operation. Although if you made hay for sale as part of your rotation and had a storage facility, it would work. A grain bin would be in here. Also, any infrastructure that you had to put in place in order to work this system. For instance, if you decided that you were going to always graze cover crops, you might want to put a fence system, a perimeter fence system into this piece of land. So that's existing, and again, any new infrastructure or buildings, the capital asset recovery rate is smaller because the life expectancy of these kinds of assets is longer. So you'd put a smaller number in there. Okay? And then finally, and then we'll have Doug show you this with numbers in it. This is the summary sheet across 10 years, picks everything up that you've put in before. If you want it, but we've collapsed all of the revenue and expenses into one line. However, if you want to look at the details, this is the detail that I promised you we would show you twice of the gross margin. Similarly, on expense, if you wanted to look at, gee, what did I put in here for this expense? There it all is. Okay. So the top down to the first yellow line that goes across is the gross profit received from crop operations, both transition and organic. But then there's some overhead expense that are not crop specific or land specific. They would come into the new area, the next area rather, and these are just suggestions. This is totally editable. I got it out better that time. So whatever applies to your operation, again, if you're already, let's say, organically certified, and this is going to be an add-on to that certification, you stop and think about the math, the initial certification fee would apply to the whole farm. It would only be the user fee that would apply to this crop. So those kinds of things should be considered when inputting to this area. Once you've done that, all the way down to net return is automatically calculated for you. Then cash flow is attacked. The first part of cash flow comes from operations, so it's all automatically populated. But there are some entry cells here, depending on if you've gone out and got a loan, you need to record the fact that you got proceeds from that loan. If you have payments of principal on a loan, it goes in the next line. If you have cash from other sources that you're going to subsidize, that's sort of a prejudicial word, but if you're going to put it in this operation, this is where it belongs. And then if you're successful, you have an owner's cash withdrawal line. Yes, ma'am. It's year to year. And this is the distilled cash flow results that you would take into your FSA office and say, lend me a couple $100,000 because I want to take advantage of $9 corn. That's the summation. So, Doug, I think we allow.
Oh, do you want to talk about the top, very top?
Oh, yeah. And go ahead.
Well, so we allow you here to put in whether.
Oh, yes.
So, perhaps in this first year, we don't have the base yield. Perhaps it's the high yield. And so you can play with different scenarios here in terms of yield and price, because each year is not going to be the same. And so it probably makes sense to build in some kind of stochastic array of yields and price, because those are not going to be the same each year. But you could see, what they are if they're your base. Right now, the default is base yield and base price.
So this is a huge miss on my part. This is a key part of this whole workbook, is the ability to put some reality in looking forward. A financial analysis person would call this a Monte Carlo type function. Again, we hope that if this tool becomes quite usable and we can get some money to improve it, we'd like to put some sliders in so that you could slide from low to high and see the effect on both profit and cash flow.